Alright, so ladies and gentlemen, you're most welcome to today's session here at the Trading Charter. You're most welcome. Yep, today, as usual, today is the 8th of April, and so far we've gone 2 months down the bootcamp. And I hope everybody's mastering this concept. So, yeah, I've called you guys here for a little analysis, and if you get a trade setup, we shall take one. So this has been the trade I took earlier on. I hope everybody's seeing the chart. Thumbs up if you're seeing the chart. I hope everybody's seeing the chart. Yes. Yes. Is everybody seeing the chart? Okay. That's nice. That's nice. That's nice. That's nice. So yeah, this is the analysis for the trade I took, and I've posted it also in the group. So it's just a small one. It's not that big. Like I was anticipating price to come up there. For those that were here yesterday when we were doing some analysis on the higher time frame, we were looking at that fair value gap there. It was our point of interest, this fair value gap. So basically today I was looking at price coming back here. But then until they took out London high, that's when they confirmed my bias of tapping this fair value gap. So shortly we can start by labeling our sessions as usual. So we start by labeling Asia. Asia starts at 1800. So as you can see, this is Asia session. So the whole of this was Asia. So that was Asia session. So let us focus here. Let us put all our attention here. So this was Asia. And what do we expect from Asia? Asia session. What are we expecting? Accumulation, basically. So finally we've seen our accumulation play out very well. Price accumulated. Yeah, it never took out any high or low of yesterday's New York session, so which confirms it as an accumulation. Furthermore, we come here to London, and London did the same thing. London still accumulated, like, so I hope everybody's getting me. So in such circumstances, there's a secret I'm going to tell you guys. In such circumstances, the New York PM, the New York AM is going to act as the manipulation. If you have London session and Asia accumulate, we are going to have New York AM session do what? Do the job of manipulating. Is everybody understanding this? Yes, thumbs up if you're understanding what I'm trying to say. Adrian, Cypher, I'm seeing you guys. Q, you're most welcome. Ivan, Jonathan, you're almost welcome. So I hope you guys are understanding what I'm trying to talk about. Like if Asia session accumulates and London accumulates, AM session of New York is going to act as what? Manipulation. Is everybody understanding this? Yes, thumbs up. Okay. So we are expecting New York AM to be or to act as the what? The manipulation. And you can see that very well it has manipulated above. It has manipulated above very well. So the whole of this price movement upwards is literally the what? Is literally the manipulation. So price is manipulating to a point of interest, and where is the point of interest? It's this fair value gap. This fair value gap is the 1 hour fair value gap. If you go back to the 1 hour, you can see it. I hope everybody is now seeing it. That 1 hour fair value gap there. This one here. So 1 hour fair value gap, they tapped it for the first time. Now they are coming to fill it in now properly to give us second chance maybe for sales. So after this, I'm expecting a lot of momentum on the sell side. So I hope everybody's getting this. I hope everybody is getting this. So furthermore, you can see that momentum has pulled in and price is going up. Price retraced a little bit back to offer more entries. Where did it come back to? It came back to the previous cycle's high here to offer more entries, but then yeah, you don't have to be greedy. Small move and you're out. So this whole movement here is just the manipulation. This whole movement that you're seeing, this whole movement from down is just the manipulation from here. This is manipulation. Where shall it stop? I presume it may stop at this main threshold here, that line. So we still have some good points to go. Let me change this guy's color. Make him blue and I'll make him faint. This is our New York session, especially the AM. And what are we having? We are having price to do what? Manipulate. Where is it manipulating? To a point of interest. And where is that point of interest? That point of interest is this main threshold or equilibrium point. Is everybody understanding that? Yes? Thumbs up if you're understanding whatever thing I'm trying to talk about. Okay. So yes, we've seen that price is now manipulating. Why is it manipulating in the AM session? Simply because London and Asia did what? London and Asia accumulated. You can see that London and Asia have the same highs, which are equal highs. You can see. And now that basically means that what? It means that London and Asia accumulated. So as I told you guys that, man, in the markets, there's nothing that is static. There's nothing that is default. There's no default setting here. Everything can just stand to be inverse. So you can see that Asia and London have just chosen to do what? To accumulate. So what are we expecting to accumulate? To manipulate, we are expecting New York AM to manipulate. Then what are we going to expect in the PM? Heavy distribution. Heavy distribution. So it's going to be nice for sellers if you want to short. If you ever want to short NASDAQ today, the best time to short it is in the afternoon session. Today's evening, literally, it's going to be moving. So yeah, so how did I enter that trade that you're seeing here? How did I enter it? If you look at this trade, basically when they were taking out London high and Asia high, which are actually equal highs, what did they leave? If you look at it very clearly, what did they leave? They left a fair value gap. Is everybody seeing this fair value gap here? This fair value gap. Is everybody seeing it? Yes, thumbs up if you're seeing that fair value gap that they left. They broke that point with a heavy candle that left a fair value gap. Now that fair value gap, I labeled it. Now that fair value gap was supposed to act as what? This fair value gap was supposed to act as this fair value gap was supposed to act as support. That fair value gap was supposed to act as support. Literally, that fair value gap was supposed to act as support to push price further. Push price further to meet what? To meet the intended liquidity levels. To meet intended liquidity levels. So for those guys that were here yesterday, we analyzed NASDAQ and we had 2 points of of interest. We had the opening gap of this week and we had the 1 hour fair value gap to meet the intended points of interest. So now let us go back to the 15-minute, rather 1 hour. We start from the 1 hour. So for those guys that were here yesterday, what did we say? You can literally see that we had points of interest. We started from up here. We started by marking out March price action. You can see what happened in March. This was all accumulation of price. This is March price action here. March formed its low. This was its low here. This low here is March low. What happened with March low? March low was further taken out here by what? April. So now this here signifies to us that what? April is the first month of the second quarter of the year. If you split this year into 4 quarters, which are 3 months, you figure out that the same thing that happens on the lower time frame of accumulation, manipulation, distribution is going to happen also in these quarters, whereby the first quarter, which contains January, February, March, may decide to do what? Accumulate. Then the second quarter that has April, May, June may decide to do what? To manipulate. So in this case, that's why we are seeing this heavy downfall of prices that are trying to manipulate literally. So they have manipulated the whole price action of March completely. Complete manipulation. And it's just the same thing. If at all we just label out from January this year, let us try to do that. Where is January? Let us try to see where January starts from. You can see that January starts here, 1st of Jan. So the whole of this has been, you can see that they've you can see that they've manipulated below the first quarter's low. They've manipulated below the first quarter's low heavily. The whole of that is, let me remove this, it's too thick. So the whole of that orange piece of price action is from January 1st. Rather, it's from January 1st. Here you can see Wednesday, January 1st till March 30th, till March. Then what happens? They take out March. They remove this. They take out the first quarter's low. So they've taken it out and we are seeing price starting to distribute downwards. So now this gives you confirmation that what we are trying to have a manipulation phase in this second quarter. And this second quarter is 3 months. So these 3 months you must be expecting a lot of sales, and no wonder it's not a coincidence that literally there's been also a stock market crash whereby almost $3 trillion have been crushed. You understand? It's been liquidated. So you have to expect a lot of downside price action. So now these were all our points. We started by labeling this fair value gap here, that this candle that caused the displacement, or that started the displacement of the manipulation, left this fair value gap after they took out March low. Then they left us a liquidity void. They came back, they filled the void, and they tapped into the fair value gap a little bit. They balanced it, they shifted to the downside, they took out previous day's low, they left an order block, they filled in the order block, they continued down, they were leaving small gaps until this big gap here was formed. Until they left this big gap here. So this big candle that gave us some momentum in the displacement move left this fair value gap so huge, so thick, and this fair value gap literally is giving us what? Expectations. It's literally giving us a lot of expectations. Why and how? It's acting as resistance. It's acting as resistance to push price downwards. What did I tell you guys yesterday? price was in between here. There's an opening gap here further down. You can see that void there, that opening gap. Every beginning of a week, price gaps like this, and it's called the opening gap of the week. So in between this fair value gap and this opening gap, price was doing what? Accumulating. And I told you guys very well that price is going to be accumulating until it either taps this fair value gap and purges it and confirms that now this fair value gap is going to be used as what? Support, after it has been what? Purged. Or else they will come back, purge this opening gap, and then we shall use it as what? Resistance to push price down. What did price do? Price is trying to reach for this fair value gap here during the AM session of New York today. And if you look at things, price came, it spiked here yesterday, tried to balance this fair value gap but just left a week. Then what happened? Came back down, started consolidating until today. So let's go back down to the 15 minutes. You see how things are. So you can see what I told you guys. I told you after price came to spike here, or came to balance this fair value gap here, price started doing what? Price started accumulating. Why is it accumulating? Simply because we are having a support and resistance level. So what happens in between? This fair value gap is acting as what? Resistance. This opening gap is acting as what? Support. So remember, they purged this opening gap, so it's literally acting as support. That's why the first entry for yesterday was here. You can see after price spiking there, violating this opening gap that was resistance, price pushed back below into the first quadrant, the topmost quadrant of this opening gap, tapped there into an order block, and we had what? Our bullish price action drive through. So you can see that price is now pushing, trying to come back and fill in this fair value gap below before it even tries to think of displacing to the downside. Yes, I hope everybody is understanding this breakdown. Is everybody getting me? Yes, thumbs up if you're trying to get whatever I'm trying to say. Alright, okay, so back to the chart. So let's go back down to the 5 minutes. As I told you guys, price is still spiking, price is still willing to go and balance higher time frame price action. So now let us just look at today. So for today, I labeled the Asia session and London session. What did we figure out in the Asia and London? We figured out that what? Asia and London were all accumulating. You can see that Asia formed the highest point of Asia, and it was equal or relatively equal to the highest point in London. That means London never took out Asia high or Asia low, which gives us a whole series of accumulation both in Asia and both in London. Now, when this happens, literally, you have to expect what? New York AM session to do what? To do the manipulation job. So we can see that New York AM has started doing the manipulation job into a point of interest. Where is the point of interest? The point of interest is this fair value gap that we labeled on the 1 hour that is acting as what? Resistance. Now, if you expect price to do that, to manipulate into that point of interest, when are you expecting the distribution? We are expecting the distribution in New York AM session, New York PM session. So literally, this has been New York AM. This has been New York. New York AM session. New York AM session, and we've had the manipulation here. So basically, we've had the manipulation into a point of interest. And what's the point of interest? It's a 1 hour fair value gap. What are we expecting to see? We are expecting to see price reject off this mean threshold or equilibrium point of this gap. This mean threshold point or equilibrium or consequent encroachment. This point here, we are expecting bodies. If we go back to the 15 minutes, we need to see bodies close below this point. If at all this fair value gap is still valid for us to use it as a point of interest for us to distribute. So we are still waiting. So I expected this move, and I literally took some trades here down. So I took some trades here down. If you can see this here, let me try to zoom into 1 minute. And I was still explaining why. So you can see the reason I told you guys I took this trade was because they took out Asia high, London high that are in close proximity, relatively equal. They took them with a what? A fair value gap. I hope everybody is seeing this fair value gap. This big candle here is the candle that swept out all this liquidity, all these highs, those equal highs of Asia and London here were taken out by this single big candle. This single big candle here. This one. Let me zoom in so that you can see it. This single big candle here. So now what happened? After they took this liquidity by this single big candle, what were we waiting for? We were waiting for price to come back to read. But then price came back to read here, but then this was too early. I always like waiting for 9:30. I always like waiting for 9:30, around 9 there, to come up to things, to start cooking. What did price do? Price shall always come back at the right time to offer fair value. So price went up. What did it do furthermore? It came back down. And what did it do? It tapped. You can see that this week tapped into this fair value gap. This week tapped into this fair value gap and gave us a market structure shift here. We used this inverse fair value gap here that was made to act as resistance. They piped through it. Now you can see that there's a wick that came and balanced it. This wick, literally, this candle here, this green candle, came back to it, and that's where we took the trade. Is everybody seeing that? Yes? Thumbs up if you're seeing that and you're understanding the breakdown. Alright, so price came back literally and closed the wick of that candle that came back to this inverse fair value gap, closed above mean threshold. And it was so nice that the body closed even the body closed above the fair value gap, the inverse fair value gap, and it was only the wick that tapped into the inverse fair value gap in the upper quadrant, literally the discount. So we bought at a discount level. So now in that case, we took price, and our liquidity levels or our take profit levels were literally these highs. There wasn't any point of interest to take profit from this fair value gap up here. Okay, you can be that patient, but then for some people like us, man, we all know that 1 to 2, 1 to 3, 1 to 4, 1 to 5 shall always get hit. So already this is 1 to 2. You can see here the risk to reward ratio. It's already 1, it's 2%. 2%, 1%, 2%, 3%, 4%, 5% shall always get hit before price starts retracing in stupid ways. So let me try to pull this thing up and you see what I'm trying to say. This is already 4%. You can check here risk to reward ratio. You try to make it smaller. You can try to see here. Let me try to here. You can see risk to reward ratio is now 4.7. Let me put for you guys 5% and you see. Where's 5? And you can see 5. Is everybody seeing 5? 5% is there. Thumbs up if you've seen 5%. Thumbs up. So now, are you seeing that when 5% got hit, price retraced? Is everybody seeing that? When price hit 5%, price retraced literally. And what does that tell us? What does that tell us? That tells us that you always have to make sure that at least your risk to reward ratio is 1%, 2%, 3%, 4%, 5%. Anything beyond that, you're going to withstand this kind of drawdown, this kind of price retracing back into a specific level or zone. So, but price was still going up, but then guys had already taken out their P's. So we took out P's there. Straight clean analysis, clean price action. I just told you guys I love NASDAQ nowadays. It's pulling off big thick candles Like you do not literally need to wait a long time, just 10 minutes and you're out, a few minutes and you're out. Big candles. So we can see that price has pushed up until this mean threshold. At what time? At 10, at exactly 10. Now, here, we do not want to see price close bodies above here on the 15 minute. If we go back to the 15 minute, we can see that it's now starting to do what? To leave wicks. So in your head, you must be preparing for a reversal right now. Because if you look at this point, okay, price can come and take out this liquidity, can induce above this high, that week's high, because that week, okay, price came and left that week. Let me go to the 5 minute, you will see it very well. Is everybody seeing this week here? This week. So we've labeled it. Price may just induce, take out some liquidity above it, then start to drop. So until we see that, we are confirming our reversals. But then on the 15 minute, price doesn't have to close the body above there. If it does that, then it reduces our chances of, literally reduces our chances of having this fair value gap act as resistance. So literally we are still patient, waiting to see how price is going to pull this off, and we are only going to react to whatever price gives us. Is everybody understanding this? Yes? Thumbs up. Any questions? So literally that's what price is literally doing right now. So we are waiting to see whether it shall close above that fair value gap with a big candle. But yeah, we've already taken out P's here down, and we've broken down this very well. So this fair value gap here is literally this one here. Just put this below here. So yeah, as we wait. So yeah. Any questions? Any questions? Any questions? Any questions on the breakdown as we are just waiting to react on price? We are just waiting to react on price. Any questions? Yes, Shadrach, any questions? Batram, Tommy. Pardon?
No, just waiting. Like break.
I'm not getting you. I'm not getting you. Like you're breaking.
I'm saying I got no question right now.
Yeah. All right. Okay. So yes, apparently we are waiting for price to do one thing, to give us a shift, but then we do not have to expect a shift right now. It is so bad to enter right now. You can see price is still doing its thing. We have this liquidity to take.
I'm also
This yes.
I'm also watching that setup too.
Yeah. Buy side liquidity to take.
Maybe that's Monday's high.
Yeah, this is Monday's high. This is Monday's high, the highest point of Monday. It's here. This week here. And it's also in the fair value gap if you note.
Yeah.
This point, it's also in the fair value gap. So remember, in order for price to go somewhere, they have to generate and take out liquidity. So I'm expecting price to at least tap above that line, that buy side liquidity, above that Monday's high. At least, because what I know is people's stop losses are still there, so they must at least clean up some liquidity to generate momentum to push price down. So I'm still expecting bullish price action, but I'm not seeing entries, I'm not seeing entry points, and it's so bad to enter right now. It's too late. Could have caught this move from down here just as I did, but there's always chances. You don't have to cry. or do what? There's always chances. Let's wait. Let's be patient.
Yeah.
I could get for you guys a setup, but then it would be so primitive. Like I'm seeing a
Let's just
setup.
wait.
I'm seeing a setup, but then
Let's
it's
just wait for the
risky.
setup to come, bro. Let's be funny.
Yeah, so we have to wait until they take out buy side liquidity, and then we cook our thing as usual, as you know. We cook our thing. We cook. Any questions? Yes, Tommy.
Yeah, my question is on the trade that you took for the buys,
Yeah,
were you aiming for the swing high?
like the most recent swing high.
No, that trade you took, the one that trade you took for buys.
Eh,
You are aiming for the swing high?
you're talking about this high here.
Yes.
Yes, that's what I was aiming for. You see, whenever you're taking profit, you must have a point of interest where you're going to. It may be a high. Your take profit levels must be internal range liquidity or external range liquidity. What I'm trying to mean is external range liquidity are highs. This is external range liquidity. It's outside price action. This is external range liquidity. Highs like this. This is one point of interest. The other point of interest when you're taking your profit is internal range liquidity. What's internal range liquidity? We're talking about fair value gaps, order blocks. You understand? So in this case, I was looking at this external range liquidity, which is previous swing high. So that's where I took profit. But then you would use this fair value gap because now this is internal range liquidity on the 1 hour. But this is external range liquidity on the 1 minute. But this fair value gap here, you could have taken profit from here with a tight stop loss like this, which would be so greedy. But you would take your profit here simply because it's an internal range liquidity. It would be something like this. You would enter from there, elongate your TP up to mean threshold there, and just stop. They will have smashed your TP. Are you seeing that? Yes? Tommy, are you seeing that?
Yeah, we're seeing it.
I hope I've
Yes,
answered
I'm
I hope
seeing.
I've answered your question on why I took my TP from there.
Yeah.
Yeah, so you could do that and you just elongate your TP, but then that's too bad. It's too bad. Like that's greediness. Let me see how much. Which percentage is that? That's being so greedy. It's 9%, man. Like it's crazy. It's very crazy. It's like risking $1 to make 9, man. Risking $10 to make 90. Okay, I'm not saying that you can't do that. You can do it, but to me, it's a point of being greedy. Like whenever you have such long TPs, man, price is going to reverse on you in the middle. So it's better you continuously take assured TP points. That's why I like using external range liquidity, which are highs and lows. I like using that. So, but you could have done that, but I do not advise. Any other question? All right. So, yes, Chris. Yes, Chris.
So now, which place were you entering from? This FVG at the bottom or this one at the top? Because
I,
I'm seeing an inverted fair value.
I entered at the inverse fair value gap. I entered at the inverse fair value gap. Let me come. I
So now,
entered.
how did you confirm that this is a bullish one or bearish?
Are you seeing this high here? There was a market structure shift. You see, price left this fair value gap, went up. Then they came back and they tapped into it with this small wick, right? They left this fair value gap, which is a CB, and it was supposed to act as what resistance to push price where down. What happened? They passed through it. They even broke the most recent high, which gives us a what? A market structure shift. What was I waiting for? I was waiting for price to come back in the discount topmost level of this fair value gap, which is now inverse, and then I took my trade. I think you can see that green candle that pushed back into that inverse fair value gap. Yes, have you understood? Have you understood now? Alright, so that's it about the entry. Like, I waited for price to violate. Okay, for those that trend lines, it's something like this. So you can see that that trend line got violated. So if I just put for you guys the trend lines, you can see that that trend line got violated there. So which gives us a what? A market structure shift. So but I don't like using these ones. These ones are very weird. Yeah, they are for babies. They make your chart look so weird. They make my chart, not your chart. You can use them if you want, but me, man. Nah, but it's all the same. So, but you just have to remember that Trump doesn't use trend lines. Nigga doesn't use trend lines. You must remember that. Isn't it crazy?
Uses Twitter.
Eh?
Uses X.
Yeah. Ah, man. Just know the guy is trying to impose his tariffs. He's trying to dip the price to get safe entries. Nigga is trying to get entries right now to push price back up. So you have to know his strategies. You must know his strategies.
So another question.
Yeah. Yes.
So this FVG was our FVG 15 minutes or
It's a 1 minute
one at the bottom.
FVG.
The first
It's a 1 minute
one
fair
here
value
down.
gap. It is a 1 minute fair value gap.
Meaning this fair value gap, you have.
What?
Okay.
Yeah, it's a 1 minute fair value gap.
I'm saying
Yeah.
this can live around the. What about the one?
Also, the one down is a 1 minute fair value gap.
What about the one at the top? Near the buy side liquidity.
That one is a 1 hour fair value gap.
Uh, can you zoom out a little bit and screenshot setup?
Let's wait. Are you seeing now?
Yes.
Wait. I hope you're seeing it. Alright, so literally that has been the breakdown. So we are still waiting. We are still patiently waiting for NASDAQ to give us a reversal. So that at least it confirms our bias of doing what? Of selling. Are you done taking the stuff? Yes, are you done?
Yes, I'm done.
Alright. Okay, so guys, what we are going to do is we are literally going to be watching this guy. So yeah, the meantime, I think we shall close this. But then just continue watching. They're almost taking out the buy side liquidity. I hope everybody's seeing that. They're almost taking out the buy side liquidity there. So we have to keep a watch on this pair literally. So there's going to be some nice setups. I believe everybody's seeing that. Thumbs up if you believe there's going to be some nice setups here. So we've broken down this NASDAQ chick very well, and we figured out she's going to be so beautiful today. So yeah, just enjoy her. She has nice company, she speaks well, she's fluent, she's elegant, she's man, she's everything. So just treat her responsibly, do not over risk. So yeah, let us wait. If I find something, I'll tell you guys. I will try to see if I see the reversal, I'll inbox you guys. I'll share it in the group. But otherwise, we can't spend the whole 1 hour here waiting. So yeah, let's close this. Right? Is it okay? Close this. Okay, but don't forget to always minimize your risk. Be careful. Be aware of high volatility conditions nowadays. You must be aware of that. So yes, I hope we shall wait. We can all see prices almost taking out buy side liquidity. Price is almost taking out buy side liquidity. Price is almost taking out buy side liquidity. Yes, Chris is saying he's waiting for a market structure shift. Correct. Whoa, wait for a market structure shift. See, I told you guys I was seeing an entry, but it was so risky. These entries are for pros, man. You see, whenever price is towards a point of interest, it is called a silver bullet. So there was a fair value gap here that price retraced into. That would be your entry, but it's very extremely risky. That fair value gap there. It's extremely risky. You can see that price came to try to violate it, but the body is closed above mean threshold. It was very risky, so I personally haven't entered it. Though you just have to know that whenever price is attacking such levels, it is going to go there, but it's risky to have such entries. Is everybody seeing that fair value gap? Thumbs up if you're seeing it. That small fair value gap. Thumbs up if you're seeing it. Yeah, but it's there, but it's I wouldn't advise anyone to literally take a trade from there. It's very risky. But then you could have caught that upward move. We can all see that they're almost taking out the buy side liquidity, and yeah, let's just wait. So I believe that anybody that's planning to trade this AM session on NASDAQ, man, it's done. Like, price has done delivering. Anything remaining in that section, it's just resistance. And what is price going to be doing? Price is going to be doing what? Price is going to be accumulating. So you do not have to expect a lot of momentum there until maybe lunch. Until lunch, between 11:30 to 1. That period of time, that 90-minute span of time, you can experience or expect a distribution to start from there. But we are all waiting for a market structure shift. See you guys in the evening. We shall break down whatever happens or whatever has happened. Yes, King, I'm seeing you having a question. King, what if we get that shift before the buy side is taken out? What happens? That shift is not valid. It's not valid. It's a fake out. King, are you getting me? It's a fake out. Why? They would have left equal highs, which is liquidity. It's a fake out. So be patient. It shall be a fake out. So yeah, see you guys. So it's a wrap with this live trading and analysis session. Yep, we meet